right, here we are. Good afternoon. Good afternoon. How is everybody doing out there today? Let's get IG going. All right, all right. How are you guys doing out there today? Good afternoon, good afternoon over here on IG. Wow, this is a beautiful day here in sunny California. It is gorgeous outside. The sky is blue and the wind is blowing. All right, guys. So good afternoon, everyone. Thanks for jumping on here. You guys hit like and share on this video. We've got some very good information for a lot of folks out there who have a business. And again, I always try to emphasize having a business doesn't mean it has to be some major incorporated business. It doesn't necessarily have to mean that, you know what I mean, you are like incorporated or have any type of structured entity, as long as you have some employees, someone that you have paid to do services. Good afternoon, Brianna Wood. How are you? Thanks for jumping on here. Hi, Taz Nash. Good afternoon, Miss Elaine. Thank you guys for jumping in. You guys hit like and share on this video. I'm so happy to have you guys here. All right. Awesome. So we want to talk about getting money back for our employees that we paid during the pandemic or any other type of economic hardship. Basically, we had COVID-19, so that's the one that most people would have had in the last 2 years or been affected by in the last 2 years. So what we're going to do now is talk about how you can get some money back for monies that you paid out to employees, for them to either have to stay at home and they have to maybe nurse someone who had COVID, maybe they had COVID, maybe they just had to basically work from home or not being able to work at all because maybe the area they lived in or, you know, everything was shut down. They weren't able to get to work. So there's a lot of reason why folks may not have been able to get to work. And of course, you had to pay them a salary or pay them wages while they were not able to work. And so what we want to talk about is how you get credit for this money that you had to pay out during the economic hardship for employees that worked for you. Hey, Lorna Smith, I love your heart. Thank you, thank you, thank you. All right, so we want to talk about the employee retention credit. The reason I'm having this conversation, guys, is a lot of questions. There's a lot of my clients who have been calling. Hey, Philip O'Neill, what's up, cousin? How are you? Good afternoon. So a lot of my employers have been calling. They're interested in the employee retention credit. They want to know how they can get this money back. It's a lot of money out there. You can get up to $7,000 per employee based on eligible wages that you pay. So there's a lot of money out there that you can get back. Of course, if you don't know how to do this, then you won't be able to get this money. So we want to talk about just some of the points that is going to allow you to zero in on getting this credit. You can go back and reclaim this credit for wages paid out in 2020 or wages paid out in 2021. And sometimes some of the employers didn't know whether or not they were eligible to claim this credit at that time. But no, you could actually go back and you can refile and get this credit. Very important, up to $7,000 based on wages paid out per employee. That's a whole lot of money, guys. If you only had 2 people working for you, again, that could be $14,000, right? $14,000 on the table. So we don't want to leave any money out there, right? So the employee retention credit, again, due to the CARES Act, is monies that you paid out for someone to work for you, and they weren't able to work during the pandemic, and you had to pay out these wages, and the government wants you to get some of this money back. There's 2 criteria. Point number 1 today is who qualifies for this credit? Who qualifies for this credit? So anyone who carried on a trade or a business. Now, it doesn't have to be sales, guys. It could be any type of services, consultation service, whatever type of business that you had going on. And you had someone working for you that you had on payroll, that you had to pay them some money for. And what it is those are the employers that are eligible for this, not the self-employed, not the people who pay out to independent contractors, okay? So keep in mind, they have to have been on payroll and you have to have paid them wages because they weren't able to work. A lot of people had to be off because of several reasons. They were not able to get to work and you had to pay them money anyway for being off. So the employers who qualify, there's 2 criteria mainly for this, guys, is 1, you had to have had some type of fully or partially suspension of your business. Now, we all know when COVID hit in March of 2020, right? Then all of a sudden businesses had to close. And it wasn't because we wanted to close the businesses. It was mandated. Remember that? If people were mandated to close their business and you couldn't open the doors, you couldn't go to work, you couldn't do anything. So businesses that were closed, those businesses, it's considered they were fully or partially suspended from operating. Some people were partially suspended because those businesses were essential business. Remember the whole story about being an essential business. So you were able to open certain hours or certain days. So there are some businesses that were partially closed, but then most of us, a lot of business was fully closed, right? So any business, that's one of the criteria for you to be qualified to get this credit. If your business was one that had to be closed, partially or fully closed, and or two, you lost a substantial amount of money. So everybody knows, right off the top, you can think about it. The people who were doing business in 2019, when it got to 2020, especially from March, that first period in 2020, when we were all out of business, technically, you would not have made any money. There's a lot of business made no money in that first quarter, even the second quarter of 2020. So these are the people who are qualified, guys. There's two reasons you could be qualified for this. One, you were partially or fully closed, or two, you had a significant decline in your gross receipts, right? So which means that you made very little or no money when you were closed. And in that case, for most people, of course, if you had a retail store or one of those type of stuff that people had to literally come in and spend money with you and you were closed, that means you made absolutely no money during that period. That's second reason why you're qualified to be able to claim this credit. So, hey, she said, good afternoon. Yes, sister. Hey, Laverne, how are you? She's saying hi to Philippa. Yes. Okay, so you are eligible if you were fully or partially closed, and or if you had a significant decline in your gross receipts. Gross receipts meaning not just sales if you're in the sales business. And if you're in the sales business, guys, this is one of the things a lot of people don't think about. Your gross receipt does not include people who sell stuff, does not include the sales tax. You got to take that out because that's not your money. So if you are selling anything and you collect sales taxes, you got to take that out of your gross receipts, right? If there's a loan or any monies that went into your bank, that's not considered sales. So make sure you know what your gross receipts are. It's just the monies that you got paid for, goods or services. Now, what they mean by being your gross receipts declining, meaning that in 2019, let's say you made $50,000 in one quarter, and then in 2020, when the pandemic hit, that $50,000 now become $20,000 simply because you were closed most of the time, right? So this is the comparison that they're talking about. So those are the two reasons you're eligible to claim this credit. If you paid out any employees, you paid money out to them. I know a lot of companies, a lot of businesses, some of my clients had paid employees to stay home for several weeks, and a couple of weeks or more than that. They had paid them a salary to stay home. They have paid them to stay home to take care of someone who had COVID. They have paid them to say, so these are the eligible wages we're talking about. And a lot of companies have done this, right? So this is the eligible wages we're talking about, and you can get the retention credit up to $7,000 per employee based on how much money you paid out. So those are the two criteria for you to be eligible, guys, to claim this credit. Once again, you guys hit like and share on this. When we're talking about businesses, we're not speaking only to major corporations. There's a lot of people who are self-employed, but they have employees. They have people that they put on payroll. I have businesses that have one person on payroll sometimes, maybe two people on payroll. Those guys are eligible. There's no limit to the amount of employees that you have. So if you have one employee, or if you have 100 employees, guys, you're still eligible for this, okay? So I like to emphasize that because people, when you say business, they always think that, you have to have this major corporation. No, you are operating a business. You have one person working for you. You're eligible to claim this credit. And if you pay that person $10,000, there's a $5,000 credit for 20. And if you pay them more in 21, there's more on that credit. We'll talk about the credit in the next go round. Okay, so number one, who qualifies? We just talked about that. And this is the employee retention credit, guys, that you can get. Is fully refundable. Fully refundable. When the government talk about fully refundable credit, we're definitely excited about that, because that's money that you can get back or money you don't have to pay in. Okay, so point number one, who qualifies? So let's move on to the second point today. So the second point, guys, is how the credit is calculated. This is what we want to know. How do you know how much money you can get for the employees and for the monies you paid out? So they had two, of course, now we're in 2022. So there's two different segments of this. If money is paid out in 2020, which was the year COVID really hit in March of 2020. So what you paid your employees in 2020, and there's also it have changed a little bit for what you paid out in 2021, right? So how they're calculated, the credit is this way, guys. You have to take, if you operated in 2019, you take the monies that you paid to your employee in the first quarter of 2019 or second, third, or fourth. You guys who have a payroll out there, you have to file your payroll tax return by the quarters to the government, right? First quarter, January through March. Second quarter, again, April through June. Third quarter, July through September. And October to December is the fourth quarter. This is what we're speaking of, the 4 quarters. So what the government is doing is they take your payroll and whatever you paid in the first quarter, second quarter, or fourth quarter, say third or fourth of 2019, your gross receipts, and you compared it to what you made in 2020. So if your gross receipts for 20 is way less than your 19 quarter, this is the difference in percentages that allows you to take this credit. So what they calculated, let's say you paid $10,000 to one employee. You can get for 2020, 50% of the amount you paid out, which is a $5,000 credit, right? That's for one employee. So if you have more than one employee, it's $5,000 per employee. In 2021, though, they increased that. You get 70% of what you paid out. So if you paid $10,000 out, you get $7,000 per employee for 2021. So they increased it in 2021 for wages you paid out in 2021 versus wages you paid out in 2020. So guys, this employee retention credit is a hot item. It's huge. Again, if you only have one employee, that's a $5,000 or $7,000 credit that you are eligible for to claim, right? So there's several ways that you can claim it now. Actually, there's only one way to claim it now, and you have to file an amended tax return. I will talk about that in a minute. However, I just want you guys to understand how to calculate the credit. 50% of what you paid out, up to $10,000 per employee. For 2020, that's $5,000 per employee. And for 2021, it's 70% of what you paid out up to $10,000 and $7,000 per employee. That's a lot of money. We definitely don't want to leave that on the table. You one person is $7,000, 2 people, $14,000. It's a lot of money. All right. So that is how they calculate the credit, guys. Eligible wages, qualified wages. It has to be qualified wages. The employee were paid for not being able to work because of the economic hardship, because of COVID-19, and they had to stay home because they were ill or they had COVID or they took care of someone. You had to pay them. These are the wages that are eligible. And so if you are estimating these wages, guys, you can pay them based on, say, what they were making prior to the time they had to take off. You can use those wages as how you calculate what it is that you pay them while they were not at work. And then what we do is we take what you paid them, and those are the wages that will qualify you to get the employee retention credit. Once again, $5,000 for $10,000 worth of wages, 50%, that's the credit you get. And for 21, it's 70%. So if you paid out $10,000, you get $7,000, right? So that's how the credit is calculated. All right, guys, so let's move on and talk about some important factors in the tax portion and how this money comes back to you, right? And this is the good part. This is what we're waiting for. Hey, how you doing over here at ID? Thanks for jumping on here. So let's see how this talk about the tax effect and how this money comes back to you. Point number 3, important factors. So the employee retention credit, again, is for monies that's paid to employees. The way you get this credit, guys, if you have an employee and you file your payroll tax return, you have to file a quarterly payroll tax return. We talk about the quarters, right? All 4 quarters. You file a quarterly tax return. What happened is you file what is called a Form 941, which is a quarterly payroll tax return. And on that form, you tell the government how much you paid on the wages. Again, one person, if you only paid them $5,000, that's perfectly fine. You still have an employee in your business, right? So this Form 941, what happens is when you pay a person a payroll, all those taxes that you deduct from their payroll check. Now, all of you guys have seen a payroll check and you see all these taxes taken out. You see the income taxes, you see the Social Security taxes, the Medicare taxes. You guys see that on your payroll check, right? The employer now, they take taxes out of your check, but the employer has to match the Social Security taxes and the Medicare taxes. Now, we're talking about federal taxes, so this is anywhere, any state. These are federal taxes. So the employer takes Social Security taxes out of your check. They take Medicare taxes out of your check, and they have to match those dollars and send it into the government. So what happens is when they file the quarterly tax return, if you're eligible to take this employee retention credit, which is excellent credit, the employer do not have to pay their portion of that Social Security tax or that Medicare taxes. They could take that back as a credit. They didn't have to pay it. If you paid it because you didn't know about this credit, guys, you could go back and file a 941X, which is a corrected form. And when you go back and you file a corrected form, you're filing this form saying, hey, I paid you some taxes and I didn't have to because I didn't know about this credit. I didn't take my credit. So I'm filing this 941 corrected form to tell you that I am eligible for this credit. And guess what? They will send you a refund of the monies you pay in for that employee taxes. So this is how, that's the tax effect. This is how you get that money back if you paid it in. And those forms would have already been filed because you would have been filing the taxes for 2020. They would have been filed by now. And 2021, you would have already filed those taxes, right? So what you want to do is file a corrected form, get a refund. You can get that money back directly coming to you. This is huge. This is huge, guys. Anyone that has an employee that pays taxes, for even one person, the Social Security taxes is 7.65%. Okay, and Medicare tax is 1.45%, which is the employer has to pay the employee. Just think about that on a lot of wages. If you had 100 employees, that's a lot of money, right? So you get, I mean, it's so hot, it's big. Everybody's talking about it. A lot of employers asking if they're eligible. If you didn't know you were eligible before and you find out that you're eligible now, it's not too late to go back again. Like I said, correct those tax forms and get a refund. Okay, that's what the employee retention credit is about. Hey, Rod, thanks for jumping in here. How you guys over here? Najee, BJ Morris, thank you. J36, thank you for jumping in. So you guys, that's the employee retention credit. Very important information. You guys hit like and share it again. This is for people who had an employee who had payroll. One person is great. It doesn't matter how many people was on your payroll. One, that's enough for you to get this credit. Okay, so today we're talking about the employee retention credit. Very hot item. A lot of people is asking about it, and it's a matter of fact, $5,000 per employee for 20, $7,000 per employee for 2021. You know that this is major. Everybody wants to know about it. And one person working for you didn't have to be incorporated. If one person was on your payroll as a self-employed person, now you can't have payroll if you're self-employed individual. If you have one employee that you took out some taxes for, you are eligible to claim this credit if you fit on two of the price. Okay, so guys, let's not leave any money on the table. This is why I'm having these conversations. We don't want to pay any more taxes than we have to. And when there's credit and money to come back, we definitely want to make sure we get those. Oh wow, wait. Yeah, so hi DJ Noside, thanks for jumping in. Rod Smith, thanks for jumping in. So yeah, so this is the reason why I have this conversation, because a lot of us doesn't really know all the things that goes on when we have business and we have employees and we're paying in these payroll taxes. When they have these credits and stuff out there, if you don't know anything about them, then stay there. The government has so much money that you can get back, even at a personal level. But if you don't know anything about it, that money stays there. They're not just going to call you up and send it to you, right? I mean, I forget it. So, guys, that's the employee retention credit. I don't want to make it any more complicated. But if you guys have any further questions, I'll make sure that you call us here at PROBY'S Tax and Accounting. I want to go over it real quick. The 3 points that I made today is who qualifies for the credit. Any employer, anyone that carried out a trade or business in 2020, and you had anyone on your payroll, if it's one person, you're eligible for it. If you had to shut down, we all remember during COVID, a lot of us couldn't operate. All of the people who were not operating an essential business was completely closed. And the second point is if you had a decline in your gross revenue, which you did. If it wasn't open, you didn't make any money, right? So those are the 2 criteria to be eligible for it. And you guys, the second point, how the credit is calculated for 2020 is 50% of eligible wages up to $10,000, which is $5,000 per employee. For 2021, 7%. If you paid out $10,000, that's $7,000 per employee. That's how it's calculated, right? And then number 3, important factor, the tax effect. You would, as an employee, pay in these tax increments. So what you want to do is file a corrected 9.1X, correcting those tax form, and I have sent you this money. You are filing that form to say, look, I overpaid you. I'm entitled to this credit. I need my money back. Refund come in, and you will get that money back. Okay. So if you think that you are eligible for paying that credit, but you just don't really know, guys, it's best to find out. Have someone look at your records. Have someone look at your payroll. Have those receipts, and make sure that you are not, if you're entitled to this credit, you want to take a look at it. All right. So that's my 3 points today. You guys, any questions about this? Give us a call again. PROBY'S Tax and Accounting, 323-90-9034. Visit our website at PROBY'S.com. You can book a consultation appointment on our website. We have 15 minutes free consultation. We can further explain the stuff to you, and we'll be happy to do so, of course. And again, just reminding you guys, this is tax time. If you haven't filed your taxes yet, make sure your taxes done, or get an extension. And for those people who have a partnership with one of those LLC, March 15th, March 1st, so we got March 15th is the deadline to get those filed. So if you have one of those things, do not go past March 15th without getting yourself an extension or get those taxes filed, right? At PROBY'S Tax, we can help you with that. You don't have to leave the comfort of your home. It's done automatically online. You can upload at our secure website. We can take care of all that for you, no matter where you are. I love this music. All right, it's really great. So, okay, so that's it, guys. Don't forget, we are having a workshop for those of you who have always thought about starting your business. Everyone I'm starting, I'd say maybe 80% of folks have always wanted to start their own business, or maybe doing it on the side right now, even if it's photography, whatever it is, gardening, whatever you're doing on the side. You could take your side hustle, you could turn it into a business, get a whole lot of tax benefits, a whole lot more money than you're doing now. If you're thinking about doing that, we are having a workshop, right? Where we'll teach you how to get your business started, how to make it very successful. You can register at elainesdesk.com/workshop. You can register on there, and I will show you guys and teach you guys how to get your business started, get going, and then we'll talk about how to get operated, right, to make it very efficient and successful. Okay, so we have over the last 35 years a lot of businesses make millions and millions of dollars, which I have personally get started when they weren't even in business. All right, so we've done that. So we have a track record. Guys, look out for that workshop. Go to the elainesdesk.com website and sign up. Business going if you already want to start it. All right, hey Makiva, thanks for jumping in. All right, thank you for the great information. This is Elaine Tajnash. Thank you so much for tuning in, you guys, and everyone who have joined us today. This is super important, great information. Yes, thank you. You guys share this website. Hey, this live, Dante, thank you, baby. On here. So I know you guys are out there working on your business. A lot of you have already started. So make sure you tune in, sign up for this workshop. And I have a lot of questions. All the stuff in this workshop are questions that I get. So all this conversation we have, all of these live, and what we're talking about in the workshop, these are conversations I have on a weekly basis for asking these questions all day long, okay? So that's why I'm doing this. He says, wait for the workshop. Can't wait. Yeah, awesome. All right, guys. So with that said, I am going to be up out of here. This is wonderful. I always enjoy sharing this information with you guys. So I'll be up out of here. You guys take care of yourself. Yeah, let's start over. Take care of each other and take care of yourself, right? That's it. We'll be back on Thursday at 1 p.m. Great personal stuff we'll talk about what's in the workshop on Thursday. So I will see you there. Have a great day. Bye-bye.